Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here with you today. But I'm even more excited to have a rock star real estate investor join us from all the way across from Ghana this morning. This guy is a rock star who's done some amazing things. It's my buddy Matt Bowles. And Matt is known really across the country as the Maverick investor. He's helping individual real estate investors buy, performing and turnkey rental properties all across the country while he's out living the good life and traveling the world out there. He's been listed as the top 50 real estate opinion makers and market leaders, and he's the founder of Maverick Invest out there. So I'm excited to have a buddy of mine for the MaverickShow.com podcast, Matt Bowles. What's up, man? How's it going today?
Scott, so awesome to be here, man. Super excited. Doing great, buddy. Thanks for having me.
I am so, I was honored to be on your podcast earlier this week and excited to have you on mine. Man, and you and I were joking about, we've been in similar places, whether it was like San Diego or here in Austin, never connected. We had to do this while we were halfway across the globe. But what's taking you out there to West Africa right now?
Man, years ago, I decided that I wanted to focus on this whole thing called lifestyle design. Right. I mean, as soon as I read The 4-Hour Workweek by Tim Ferriss in 2007, I said, man, location independence is what I want to do. And at the time, it was really an interesting juncture for me because I was investing in real estate. Right. And so I had read all the real estate background stuff, Robert Kiyosaki and all that whole stuff. And I was investing in real estate. And then what happened to me was I all of a sudden one day walked into work. I was in a regular 9-to-5 office job. I got fired from my job. I said, man, this is a sign that I was supposed to do something different. And so what happened was I was like, one of the things that I know how to do is this whole real estate investing thing, because I was buying rental properties. I was buying out-of-state rental properties. And then my friends started approaching me and they started saying, man, can you help me do what you're doing? How are you doing that? So I said, sure, this is what I'm doing. I'm doing this, doing that. So I knew there was a demand for me to show people how to do that. So as soon as I got fired from my job, I said, I'm figuring out how to build my own business. And this is what I know how to do. So I'm going to help people start buying performing rental properties. And as we built that business, we started back in 2007, right? So 12 years ago now. And as we built that business, we said, in addition to having these goals of making income and all the normal things you would think of with a business, we also want to create a path for location independence for ourselves and for our clients, right? So we want people to be able to invest in real estate in the best real estate markets, regardless of where they live. They should live where they want to live, travel where they want, do their thing. That should not impede them from buying and owning rental properties in the best markets. And similarly for ourselves and for our staff, we said, let's build this up with a location independent infrastructure so we can live anywhere that we want to live. And so we have staff all over the country, all over the world. And I tend to just pick really cool and interesting places to go and hang out and work from there. So right now I'm in West Africa. I've been in Africa for about 4 months now. I was in Cape Town, South Africa for a couple months, Nigeria last month, and I'm in Ghana this month, just checking it out, man, because it's a cool region. I've never been here.
That's awesome. And then you're planning on heading over and seeing Putin and talking housing markets in Russia here for a month too, aren't you?
I am going to do that in September. I'm going to go up and check out St. Petersburg, check out Moscow, and then I'm going to take the Trans-Siberian Railway from Moscow all the way across to Ulaanbaatar in Mongolia. So that should be quite the adventure. I'm trying to get you to join me. I'm trying to get you to join me on that, Scott. So you got to let me know how your schedule is shaping up there, buddy.
We're moving some things around. It's kind of funny. Things are popping, but yeah, definitely. And let's start some. What would you say is the biggest myth? Because you traveling so much and making things happen for us, and a lot of people can't get outside of their own neighborhood. They can't look at something. They can't identify something outside of their block. What would you say has been the easiest thing and the biggest mind block that you've removed to be able to do this from just about anywhere, Matt?
Well, I think if you're an investor, right? Because there's a couple of questions, right? One, there's a question of being a real estate investor, and two, there's a question about being an entrepreneur. Both of them have big blocks, right? Yeah. So to take the investor question first, I think that the main thing is that you need to see your rental properties as an investment. The same way, if you're going to buy stock in the stock market, you don't need to see and touch the stock certificate, right? You don't need the corporate headquarters to be in your backyard, right? You're not only going to invest in companies that are in your hometown, right? You're going to invest in what you think will be the best performing investment. And so the same thing with rental properties. Now, as long as you do your due diligence, that's really key, right? But you would do the same due diligence on an out-of-state property that you do on an in-state property. If you buy a property down the block, you're going to send your home inspector in. unless you're a professional home inspector, you better get a third-party professional to inspect that property before you buy it, right? But you can do the same thing if it's out of state. You're going to send your appraiser in there to make sure you're getting the right value. You're going to make sure that it's being rented at the correct market rent and that there's rental demand and all those things. But you'd do the same thing if you were doing it down your block. And so the idea is that in U.S. real estate, there is not one national market. I will tell you that. There are a lot of local markets. And even if you live in a really advantageous real estate market today, 10 years from now, there's unlikely that that's still going to be the most advantageous market because they change over time. And so what we wanted to do in building Maverick Investor Group is to help our clients be able to buy performing rental properties in the best markets over time and to diversify their portfolio across markets and then to be able to, choose the best markets without being inhibited where they live. And I think the key mindset shift there is to think as an investor, not as a landlord.
That's true. It's like a big thing. If people want to go out, pick out paint and carpet and peek in the windows. And if you've already got turnkey, somebody's done all the work, you've got on-site property management and the numbers make sense, you're not going to go. What's the quote from Tommy Boy? I can sure as hell shove my head up a bull's ass to look at a T-bone, but I'd rather take the butcher's advice for it, right?
Yeah. And I think, it's interesting because, for people out there, and just to be super clear, what we offer is not for everyone. There are some people that want to go fix and flip properties and they want to walk through distressed properties and take out a hammer and oversee the construction themselves. And then there's other people that want to be a landlord. They want to have the direct interaction with the tenant. They want those, for some reason, I don't know, calls about broken toilets late at night and go and fix it themselves. And they want to do that.
They love the broken window side of things. Sorry to interrupt you there.
Yeah, no, it's all good. But those are not our clients, right? And no disrespect to people that want to do that. If you want to be a do-it-yourselfer, fix and flipper landlord, like that's totally cool. And that's your thing. The specific niche market that we're targeting, and this is important from the business perspective, is everybody is not your client, right? I mean, I'll tell you exactly who our client is. Our client is the person who they have a busy life doing things that are important to them, and they don't want to spend their own time finding properties, renovating properties, and dealing with tenants, toilets, and trash. That's the first criteria of who our client is, right? They value their own time. They don't want to do that, right? And they want to be able to have all of the benefits of real estate, of owning the actual deeded hard asset. You own the house. It's not a REIT. It's not a real estate-backed security. It's the hard asset of the house. You get all the benefits of that without having to spend the time and to be the landlord and to do all the headachy stuff, right? That is who our client is. And it's important that, you know who your client is, because it's not everybody. But for people that want to be able to do that, that's exactly who we cater to. And the other aspect of that is that it dramatically reduces people's risk when they get into real estate. It reduces the upfront risk, right? Because if you're buying distressed properties and then you're doing the renovation and then it takes longer than you expect and then it's over budget and there was more stuff wrong with the house that you thought because you bought it at a foreclosure auction and you couldn't get inside and all this kind of stuff, all that risk is on you, the flipper, right? Whereas with our clients, all of that risk has been taken by somebody else. So you're walking into a performing, already renovated, already tenanted, already cash flowing asset. You're going to do your due diligence. You're going to inspect it. You're going to verify the lease with the tenant. You're going to do all that stuff. But if it passes your due diligence, you close on that property and you cash flow from day one. So you make your money when you buy. And people that want to do that, those are the people that work with us.
That makes a lot of sense out there, Matt. Now, a couple of things out there. Are there specific markets that you're really, really loving right now in the country, if you don't mind sharing?
Yeah, no, I'm happy to. And it's really an important question, actually, because my answer today is going to be different from if you asked me this 5 years ago. And if you ask me 5 years from now, it's also going to be different. So assuming people are listening today when you air this, I'm happy to share with you the answer. A lot of the stuff that we're doing right now is very Midwestern focused. So markets like Kansas City, Indianapolis, St. Louis, Ohio, places like that really are showing the best price to rent ratios. They're also showing the best capitalization rates because, as you know, living in Texas, you can have a good price to rent ratio, but if your property taxes are super high, that can knock out a lot of your cash flow, right? So places where your price to rent ratio is optimal, your expenses are low, so you're optimizing your cap rate. Now, 10 years ago, right, 2009, we were doing stuff in Phoenix, Arizona. We moved over to Atlanta. We've been doing in a lot of different markets. I mean, we've helped our clients buy properties in over a dozen states. But right now, 2019, the Midwest really, really has a lot to offer, particularly markets that are high demand rental markets, because people are moving in there for job creation, low unemployment, and low cost of living.
Yeah, those are great things. Those aspects are very important versus stuff like, I mean, great. I love Austin, but it doesn't make a lot of sense. It's overpriced, I think higher taxes. We're at what, 2.7%, depending on what's going on. And, although the rents increase because we got a low occupancy rate here, it still doesn't make a lot of sense of the overprice. And then the cap rates are shrinking down into, mid to low single digits for the most part. So.
Which is the case with a lot of very desirable cities to live in. And it shouldn't impede you from living there. You should be able to live in Austin or in Manhattan or in San Francisco or wherever you want to live, but be able to own properties in the more advantageous cash flow markets.
Yeah, that's definitely. There are, what are some of the things, I mean, those things that are constantly changing. What are some places that you're pulling information from to identify the next markets out there?
Sure. Well, there's a lot of different stuff to look at, right? I mean, one of the things is that, there's very basic stuff. There's, looking at what the home markets, the housing prices are doing at the Federal Housing Finance Agency and the indexes that they publish and all these kind of reports to show housing stuff. Then you've got U.S. Census reports on looking at where our population's moving to, where are they increasing. Then you've got the economic reports, right? About where are the jobs coming, where the unemployment rate's low, where the jobs increasing, right? So all this stuff is basic, government-based publications. Then you've got services, though, that are more important that have come out really for a real estate niche. So you've got services like Rent Range, which are showing what is the market rent for a particular, it literally can go down to the address level of a single property and say, what is the market rent for this property? And that's really important because you need to know what you're going to be able to rent it for. And even to be honest with you, even if there's already a tenant in there paying this much rent, you verified the lease, you as the investor want to make sure that when that tenant leaves, you're going to reliably be able to re-rent it within 30 days or less to another tenant that is happy to pay the same or more rent. And so using those services, they can show you what the market rent is, as well as which way rents are trending, right? And what the vacancy rate is locally and things like that, so that you can really add meaningful substance to your assessment of these properties.
Yeah. Are there areas in the country, or is there a rent level that's too low for the most part, where maybe it's a two-gun area, out there? What is there like numbers below? I'll give you an example. Like one of the things we do when we're looking at buying distressed debt, we look at, hey, if the rent rate's like $500 or less, you probably need not to be buying in that area. It's kind of a rougher, lower class.
For sure. Yeah. I mean, obviously the answer to that question depends on the market again, right? So high and low rent in San Francisco or LA is very different from high and low rent in Indianapolis. So there's not one number that is a national number, but I will absolutely tell you that it's really, really, really important to work with local market experts on the ground, because there's two things you want to avoid when you're selecting a property. Because even if you do all the macro market analysis and you say, oh, this MSA, this metropolitan statistical area is just dynamite. The jobs are coming out and people are moving in and there's just all this housing growth and everything's booming. Even if you do that analysis on the market itself, that does not mean that every micro market inside that market is a good place to buy. And in fact, the reality is most real estate, even in that market, is not going to be a good investment. And that's going to be for two reasons. One, because it's either going to be too high end. Okay. If you start buying luxury properties, you are not going to be able to rent those properties for enough money to cover your expenses and make a meaningful cash flow. And the other side of the scale is that it's too low end, which means it's not going to be in a desirable neighborhood for qualified long-term tenants to rent, which means you're going to get lower quality tenants that are going to be more transient. They're going to be less stable. You're going to have higher vacancy. You're going to have more frequent turnover, and you're going to have more maintenance and repairs associated with the property, which is also going to knock out your cash flow. Okay. So you want to be able to buy in the real estate investor sweet spots, we call them, which are those optimal areas where you can cash flow well while attracting long-term stable tenants And then when you're ready to exit, you're ready to liquidate the property and sell down the road. That's the type of neighborhood where you're going to be able to sell that house to an owner occupant on the retail market and have a built-in exit strategy for yourself because it's in a desirable area.
Makes a lot of sense out there. Those are some great nuggets, everybody. Matt knows his stuff out there. So as you're looking at different markets now, are you guys going out there and working with local property managers on a regular basis and then identifying good versus bad property managers?
Yeah. So one of the things that we do is we have local market expert teams that we build relationships with on the ground in these markets. Okay. So the way that we've actually structured our business, so Maverick Investor Group, the company, is a licensed real estate brokerage. Okay. So the main business model that we have is that we build relationships with our real estate investor buyer clients. Okay. So individual people come to us, we get to know them. We get to know their buying criteria. We get to know their investment goals, maybe their retirement goals, all of this kind of stuff. We help build over time a real estate portfolio of cash flowing rental properties that is a good fit for them personally. Right. So that's what we do. Now, then, as I told you, these markets shift over time, right? So the markets we were in 5-10 years ago are not the same ones that we're helping people buy in today because there's better ones today. So what we do is we watch those trends and then we build relationships with local market experts. We don't just go in and say, oh, hey, I've never been to this market before. I think I'll start buying and flipping houses, that'll probably be a good idea. I have no relationships. I don't know the neighborhoods, right? No, we go in and find people that have been in that market their whole life doing this professionally at scale, using their economies of scale, using their professional connections and networks, right? And then those are the teams that are acquiring, that are renovating, that are leasing it out. And then there's either a vertically integrated management solution, right, inside that company, or there's a third-party management company. In any case, though, that's the preferred property management company. So that comes with that in place, but you're not required to use that or to continue using that. If for any reason that doesn't perform, we absolutely help our clients get into a better property management situation. That's one of the things that we do.
What's some of the tips and advice you'd give to somebody to selecting a good property management team? Because I know we've had good and bad. Everybody's had good and bad. But what are some of the things that you guys you think are things that you guys are doing to really help identify that? I mean, yes, knowing local people have been in that market the entire time, but what other tips can you give our listeners out there?
Yeah, I mean, one of the things that we do as a company is we make it pretty clear to any of these folks that we're working with that working with us is a volume business type of situation, meaning treat our clients well, and there'll be a lot more where that came from. Don't treat our clients well, and we're going to pull all of our stuff away from you, right? So we're creating an incentive for those companies to treat our clients well because they know if they get a call from me about, why is this person calling me because such and such is the thing, they know that is related to a whole bunch more than just that one person who called. That's related to any and all of our clients that are there, and that business could be pulled away from them. So one of the things that we try to do is to create that sort of leverage and that sort of community power among the people in the Maverick investor community to really get that better quality stuff. But ultimately, we also have, we like our clients to tell us how things are going on, because if I get multiple complaints from different clients about something, I'll say, hey man, well, let's try to look at for a different property management solution. Maybe some other people are having the same issue. And, and we know about that as well. So, that's why we have long-term relationships with all our clients. We're regularly in touch with them, even after they close, after they sell. We're not a transactional real estate brokerage. It's not like the person that helped you buy a house, they close the thing and then you never hear from them again. We're helping our clients on long-term portfolio building strategies, including when things go wrong, to help to right that ship. So that's what we try to do as a company.
Now, are you working with a lot of self-directed IRA investors who are using their IRAs for this stuff to fund it?
Definitely, for sure. Super popular strategy.
Now, are you working with lenders to help them get financed? Are they using a lot of cash or going and getting non-recourse lending for the most part?
So for people that can qualify for financing, I mean, it's an unbelievable time to get a 30-year fixed principal and interest mortgage. I mean, it's just insane. Historically, how low rates are still today compared with history. And, the other thing about getting a mortgage that's just crazy is not only do you put, 20% down and that's it, and then the bank takes the rest, but then if the house appreciates, if the house appreciates 5%, let's just say over the course of the year, well, if you only put 20% down, man, that's a 25% return just on the appreciation alone, right? In addition to that, if you take out a mortgage, guess who's paying down your mortgage principal every month? Your tenant, right? Even if the market doesn't go up at all. This is the other thing we tell our clients: don't speculate. Don't speculate. I mean, that's fine to try to buy in the path of growth or whatever, but that's a peripheral bonus, man. Don't speculate. Make your money when you buy. You buy in the right market and you collect that rent every single month. Even if the market doesn't go up $1 in 30 years, which is totally unheard of, you hold that thing, your tenant will pay off your entire mortgage. You own the property free and clear, even if the market didn't go up at all, right? So create, situations for yourself where you are stacking the deck in your favor because you're buying based on real estate fundamentals. You're not relying on speculation for the market to do something.
Mm-hmm. It's also a great strategy for 1031 exchanges and things like that to move money into that. And then also you start figuring the tax benefits of, depreciation and cost segregation across the board. A lot of great ways to, even if your value stays flat, of being able to pull some tax advantages and make some things happen.
Well, that's exactly right. I mean, that's what everybody needs to understand about why buying and holding, right? Not flipping, buying and holding residential investment property is unheard of compared to any other asset class investment, because you've literally got 5 different profit centers, right? You have the potential for market appreciation. You have your monthly cash flow that's coming in. You have the tax benefits that you just mentioned, which if people don't know how depreciation works, the IRS allows you to depreciate the structure of your property, not the land. You got to break that out, but the structure of your property over 27 and a half years. Even if it's going up in value, you're allowed to take a loss. That's insane. It's the most tax advantaged asset in the United States. It's unheard of. So basically what that means is if you're, let's say you buy $60,000 property, you say the land is worth, you break out the value of the land, you say the structure is worth 135 grand, right? Well, that's a $5,000 paper loss you're allowed to take on that thing every year that you could write off against your cash flow, which would otherwise be taxable. So you've got these tax savings that are happening every year. The other thing that you've got is a built-in hedge against inflation. Right? Real estate is this uniquely inflation indexed asset where home prices go up with inflation, rents go up with inflation. And oh, by the way, if you took out that mortgage, you're borrowing that money in today's real dollars. Okay. If there is any inflation at all over the next 30 years, you're paying it back in diminished nominal dollars. You win, the bank loses. I mean, talk about, so there's all of these different profit centers associated with your one residential investment property. So even if one of them doesn't perform, you've got 4 more. So it's an incredibly, hedged type of investment where you have a lot of different opportunities there to be quite profitable.
It totally does there. And you mentioned something, if in case it doesn't perform on some things, what are some, because I'm sure that's probably where you see a lot of mistakes being done by investors and landlords out there too, is not acting soon enough to start the eviction process or start working to remove that bar, right?
Sure. I mean, and when I say doesn't perform, I mean in any of these areas, right? So if the market does not appreciate, let's say it stays flat or it goes down, right? I mean, let me tell you something. The market's going to go down at some point. It goes up, it goes down. It's been going up for a while. It's going to go down again, and then it'll go up again. I mean, this is how it works, right? So what you want to do is you want to position yourself to try to insulate yourself as much as possible from a market downturn. Let's say as one example of, the appreciation on the house, it didn't perform, right? Well, if you buy stock, and you just buy the stock straight and it goes down in value, you're toast. I mean, there's nothing else. You're done, right? But in real estate, buy a house, it goes down in value. Well, that doesn't impact your cash flow at all. Your tenant's still paying the mortgage every month. You still got positive cash flow coming into your pocket every single month, right? So very different type of investment. And so that's what I mean by based on real estate fundamentals. Now, other times you might have a disruption in your cash flow, right? So what are the downside risks of dealing with tenants? Well, of course, the risks are that they might not pay the rent. They might lose their job. They might default. You might, in a worst case scenario, have to evict them. Although if you have a good property manager, there's a lot of ways to not evict them. As you know, Scott, you're the master, the maestro at negotiating with people to either resume payments, get in a payment plan, or give them cash for keys and have them peacefully and quickly leave the property, right? So, there's a lot of ways that you can do that and replace the tenant, but ultimately that's a cash flow disruption, of course, right? If there's any maintenance or repair issues to the property or, things like that, that can cut into your cash flow. But that's why you have all of these 5 different profit centers, because you're like, oh man, my cash flow just got, I got this disruption of my cash flow. Okay, well, the market went up 8% last year and you only put 20% down on your house and you took the tax benefits and you got, this and you got, so it's like, okay, well, like what's your overall ROI, even though such and such, one thing didn't go the way that you planned, right?
It's the truth. And there's the multiple problems, but a lot of people don't realize that too. There are a lot of organizations out there, city groups, church groups, nonprofits that are actually designed to help people stay in their house, paying rent for 90 days or paying the mortgage for 6 months. We've had some of that happen on our note business where a third party said, hey, we'd like to pay your borrower's mortgage for 90 days. We allow it. You're going to pay me $1,500 for 3 months and give the person an opportunity to get back on feet? Okay, sure. I'll take your money.
Right.
But that's the thing. Some people get so bogged down in specific microeconomic factors. We're looking at the large picture of things out there. And that's one thing that you guys do really, really well. It's a bigger picture. It's not one market itself. There's multiple factors to look at that stuff. But most importantly, truly diving into what somebody's long-term goals are, right? I mean, I think it all starts with, hey, what are their realistic what are their expectations, and are they realistic, or are they kind of smoking the crack pipe, right?
Yeah, 100%. I mean, and that's what we do. That's why we do a personal consultation. Each person that comes in, they virtually sit down with us, right, over a Skype call, over video, and we talk to them about what are their goals. Where are they in their financial journey? Are they thinking about, what's their retirement plan? What's this? I mean, the same type of thing you'd have with the financial planner of any kind. These are people that understand the value of real estate and want to have at least some of their wealth invested in real estate. So we help them to do that and to have a portfolio building strategy where over time they can continue to build up those cash flowing assets and continue to take the long-term benefits of holding on to instead of selling that property.
Good stuff there. Now let's switch it up a little bit. You talked about community within Maverick Group. You guys have an online forum or a group where your investors or as I like to say, family comes together on a regular basis?
I mean, people can definitely follow us on social media. So there's a lot of engagement there. We're on I mean, I can give you the links for the show notes and all that, on Facebook and on Instagram and all of that kind of stuff. So we're very engaged with folks that are there. When anybody comes into our door to, take a piece of content from us or, check out any of the stuff that we've got going on, we got tons of free educational stuff that we just share with people. We reach out to those people individually and they, they come in and, we have a consult with them. We build a relationship with them and, have a regular kind of ongoing relationship with them. We also have, as you know, the podcast, and we have the listeners for the podcast. So we have a growing audience on that. It's called the Maverick Show. And, there we're interviewing super interesting location independent entrepreneurs and real estate investors. You were just on the show last week, Scott, and crushed it. That's published already, episode 41. If people want to check that out, getting a great response to that. So, we have different, I think, people that come in for a podcast audience or that follow us on social media or that actually come through our door and do the consults with us. But however people want to engage with us and be part of that community, they certainly can.
That's good stuff. Now let's talk a little about some of your fun location independent travel there for you. So when you're looking at because you said you've been in West Africa for 4 months and then
I've been I was in South Africa for 2 months, West Africa now for about 2 months. And then I'll be here for about another 1 month. Yeah.
Yeah. So what does that look like? Are you you're obviously still making deals happen back home. What's your kind of schedule look like being abroad like that, Matt?
Yeah. So what we did with our business is we built it in a totally location independent fashion, meaning that we can run it from anywhere, which means I can hire people from anywhere, which also means our clients can be anywhere, right? Which is the idea. So our sales director, Phil, is based in Boston. Our social media community manager is in London. My business partner, Valerie, is in DC. I'm at the moment in West Africa, right? And any of us could change locations. We could just swap locations and it wouldn't impact us at all because like I said, we're having these video calls with our clients. I'm jumping on the podcast with you here over the internet. We're doing the work that we're doing from anywhere. And then we have the relationships with our teams on the ground that are the actual boots on the ground in the markets that are doing all that stuff. They're there. They can, any clients want to go visit the markets, want to see their properties, they can just go ahead and do that. And we've got those teams on the ground there that'll take care of them. So for us, it's just about lifestyle design. And, for that, we all make our own choices. Do we want to be based somewhere and travel a little bit? Do we want to be traveling a lot and be based in a lot of different places? For me, I like to go to really see a lot of different parts of the world. I have literally been to over 50 countries, 50, in the last 6 years, right? Wow. And I will stay usually for about a month or so at a time in these different places so that I can feel like I live there. Right. I go shop at a grocery store and go to my regular coffee shop and get to know people. And I'm not just staying at a hotel and, isolated in some tourist thing. I'm actually living in an apartment and residing in that place and living the life there. And so I love to do that. I've done a lot of, been a lot through Asia and South America and Europe and now Africa and so forth. So for me, it's a blast. And a lot of times what I'll do is I'll do it actually with a community of people, right? And so there's a number of companies in the last 5 years that have come up into the space to cater to so-called digital nomads, right? Like me, and say, because when you start traveling around a lot, if you're traveling by yourself, it gets pretty lonely, right? Or even if you're traveling with one other person, people do this with their spouse or whatever, but even so, you need a community of people oftentimes. And so there's companies that have come up that have said, hey, let's have a whole bunch of these working professionals that want to travel the world, and we'll take them around the world together, right? Provide housing, provide workspace, co-working space with 24/7 Wi-Fi and all this kind of stuff. And then you get a whole cool community to do that. So I have traveled the world for a year plus at a time with the same 50 people. All this kind of stuff, man. So it's really been a blast. It's pretty amazing. And it's really fun to see all the infrastructure that's coming into place to facilitate this kind of lifestyle.
Yeah, that's totally definitely exciting thing. It's a whole new realm that people, you don't have to be so plugged into Austin or San Francisco and stay there. You've got the opportunity to make a lot of things happen. What has, the question I want to ask you now is, what has probably been the biggest surprise for you in the last 5 years of traveling like it is? And surprised by something that happened in business that kind of maybe blew your mind, or surprised something that you were like, it made things a little different than you expected.
One of the things is that I think when you think about doing this, there's a little bit of apprehension to be like, oh man, like what might happen to my business if I do this, right? And so it was interesting because I was location independent for a while, right? I could have been anywhere. And I was living in Los Angeles. Now I had no business purpose in Los Angeles. I just liked LA. So I was just there by choice, but it was in the US. So it kind of felt like, okay, I got a business partner in DC. I got a, staff around the country in different places, but still I'm in the same country. Right. So then when I went abroad, and I said, well, if I can do this from LA, I can do this from, Buenos Aires, Argentina, or I can do this from wherever. I don't need to be in LA. I'm not personally interacting with people or doing something physical here. Right. So I was like, you know what, let me try that. And so as I did, I was a little bit apprehensive about, oh man, is this going to, what's going to happen? And all you have to do is just the same thing. You just have to secure, good Wi-Fi, get the infrastructure that you like. And to be very honest, location independent companies in general, I think it forces you to create more solid systems and processes than you otherwise would. Because if you're all sitting around the same office, you can just create a whole lot of crutches. You're like, oh, I'm not going to really refine that process. I'll just go into this person's office and do this. So you just kind of find these shortcuts to do it. But man, if you are all location independent and your staff is distributed around and they got to know what they need to do and they got to communicate with other people about the ongoing projects, man, you better have your systems and processes tight. So I think it actually forced us to improve the clarity and precision of our systems and processes.
I was hoping you'd say that, because that's such an important aspect, whether you're using, maybe you don't have a team abroad, maybe you are not a solopreneur, but still being able to make things happen with the use of virtual assistants or, Upwork and other things to really make things happen. It's gotten actually cheaper in a lot of cases. I'm sure housing's a lot cheaper in some of the places you've been versus living in LA. Can we agree with that?
Unbelievably so. I mean, people, this is the amazing thing, right? People are like, oh man, like that sounds so expensive what you're doing. I was like, are you kidding me? I was like, do you understand how much money I saved, even including all of my international airfare included in my living expenses are so much lower now total annually than they were in LA. It's crazy because the rest of the world is so much cheaper. I mean, if you go to a place, if you go to Thailand, which is one of the most beautiful countries in the world, in my opinion, has some of the best food in the world, lovely people. It's one of my favorite countries. You can go to Chiang Mai, Thailand, and you can rent a fully furnished apartment, including all of your utilities, Wi-Fi, and everything, studio apartment, right? For 600 US dollars, right? I mean, actually, you can probably rent it for less than that. You can probably rent for between $300 and $600 US dollars a month, fully furnished, including all of your utilities, right? And so it's like crazy, right? How inexpensive you can live in these other countries, and you can live well. Like you eat good food, you got beaches, you got gorgeous stuff, but your expenses are a fraction of the price. And so it's really interesting to see that there's actually a lot of gravitation of, entrepreneurs and digital nomads to these kind of places because they're like, man, if I can get by in Thailand for 600 to $1,000 a month total, including all my food and everything, man, that means I only got to make $7,500 to $12,000 to cover all my expenses for the year. Like that's all you have to produce in your business, and anything on top of that is like net savings, and investment dollars to you. So if that's if that's your overhead, right? I mean, that gives you quite a runway because somebody can be like, oh, I got 10 grand. I'm going to go to Chiang Mai and live for a year, and I'll have a year of my expenses covered to try to build my business and make it work. So it's really interesting because you're seeing these huge communities of entrepreneurs and digital nomads congregate in places like Chiang Mai, places like Bali. I mean, these are gorgeous places with amazing food, amazing beaches, and the cost of living is like insanely low. So you can totally do that lifestyle arbitrage thing because if you're making dollars, but you've got living expenses of, Thailand, then you're doing, you've got a serious arbitrage situation going on that you can benefit from. And of course you're contributing to the local economy there and, all that kind of stuff as well. But it's quite an amazing opportunity out there for sure.
I love it. And I know our listeners love it as well too, because, they love the opportunity, love looking at things. And we're pretty lucky that Note Nation out there from people, all across the United States. Actually, I was speaking to somebody from Norway, a listener, and from Sweden today as well too, reached out about some things. As you've lived in these different areas, have you found, besides rent being cheap and stuff like that, have you found other like investing opportunities in real estate in different markets, different areas, or still sticking mostly with the United States stuff?
So in terms of the actual real estate assets, we are focused only on U.S. real estate for a number of reasons. One, because I believe it's actually more advantageous than the international real estate that I have seen in terms of the stuff that we're doing anyways. And number two, there's a whole bunch of just legal precarity that gets kind of a little bit questionable when you start getting into other countries and their legal systems. And there's, it's just a whole different thing. Whereas the United States is an extremely clearly regulated thing. You know exactly what to do. If your tenant doesn't do this, you have the right to do that. Other places, man, there is just a whole bunch of gray area and all sorts of legal stuff, there in terms of how that works. And so we've just chosen for our companies, not to say people can't do it, or if somebody's an expert in this, they can't make it profitable. I mean, I'm sure, people have, but like for us, we just said, you know what, let's have a very narrow niche focus on something that we know and do very, very well. And so we've been doing the exact same thing for 12 years, which is helping now I do around the world meet people that want to invest in U.S. rental properties. That's for sure. And we have clients all over the world, right? So the buyers, they can definitely be anywhere and own U.S. rental properties. But all the actual real estate is in the United States in terms of what we deal with.
No, that makes sense because there's a lot of gray area in different parts of the world out there for sure. But that's the beautiful thing. So many opportunities here in the United States and so many different, especially black and white ways to get things done versus a lot of that in between gray area of whether you can evict or not evict, or you got to be somebody's uncle or whatever you got to do to make it happen out there. What I would love, and I'm sure I see somebody comment, ask a question on the Facebook Live here, was how are some of the ways that you guys are attracting buyers or investors for these deals? If you want to share any of the nuggets that you guys are doing to locate these individuals, these investors?
Sure. I mean, well, one is that we've been in the game for a long time, man. I mean, we started in 2007. And so, that's everything from, the type of stuff that you've been doing in terms of speaking at events or, coming on podcasts like this and people hearing us and all that sort of thing. As a business, I mean, certainly we do regular advertising stuff through, channels of people that have real estate audiences. We'll do webinars for their audiences or do advertising in their magazines or, even do Facebook advertising or stuff like that. We also have a network of real estate agents around the country. So I told you that we're a licensed real estate brokerage. Now, real estate, as I mentioned, being a heavily regulated industry means that we're only allowed to pay referral fees,
right?
Affiliate fees to somebody that is a licensed real estate agent. That's a legally mandated thing. But if somebody is a licensed agent at any brokerage in the US, they can actually join our affiliate network and they can actually send their clients to our buying opportunities. And what happens is really cool because a lot of realtors are an expert in their own local market, and they're an expert usually at helping people buy houses to live in.
Yeah.
But after the person buys a house to live in, well, now what? Right? Well, we tell them, hey, you know what? Maybe some of your clients would be interested in buying rental properties. If so, feel free to invite them onto our webinars. If they end up buying something, we'll pay you a referral fee for the introduction. Right. And so we actually now have a large network of real estate agents that are able to send clients our way as well.
That's a great nugget there out there, because there's a lot of agents that listen to this show. So, and I think a lot of people don't think about that. They think about, oh, hey, you want to sell your house? I'm gonna call you in 5 to 7 years, or call you the 1st of January when we're doing some realtor coaching with Keller Williams or whatever out there.
That's the thing, right? The average home buyer, primary home buyer, purchases a house once every 7 years or so. The average real estate investor purchases 2 houses a year, right? So if you can turn some of your primary home buyers into investors after they close with you, at least even a small percentage of them, man, that is some serious repeat business. So we absolutely work with real estate agents. Love that. And then of course, the primary way that we like to get our business is of course, repeat business, referrals, recommendations, and the word of mouth. That's obviously the best way that we love that when people send their friends in.
That's what makes it. Now, there's some things. I got another question for somebody. There's some things that you're doing or making sure with some of these different properties, like you say, performing. Are you looking for specific months that a tenant's been in place already? 3 months, 6 months, a year, that make it more attractive to you?
So what we do is we have relationships with these providers on the ground in the local market. So what they're doing is they're actually at scale professionally, right? I mean, these are well-capitalized independent companies separate from us, but we have a relationship with them. And what they do is they buy distressed properties in quantity. Okay. And then they renovate them with their own construction crews at scale. So they're buying their materials in bulk. They're doing all this stuff. So they're able to do all this way cheaper than an individual, right? And then they will lease them out to a qualified tenant. Now that process is important that you, the investor, understand. What does that mean? What's a qualified tenant, right? What is their process? Well, they'll tell you exactly what that is and show you the tenant qualifications, right? That's part of your due diligence to see that, okay? So they make, whatever it may be, 3 times the rent, and they've never had an eviction, they've never had a bankruptcy, they never had a felony. Whatever the criteria is for that property manager, you see that and you say, okay, this tenant came in and this is what they make. And they signed a 12-month lease, right? It's actually pretty good to get in early on that. Then you got 12 months of the, the lease there and so forth. So you're going to be able to see all of that. So when we say performing, what that means, it's been fully renovated and it has a tenant in place paying rent by the time you close. Now, we Maverick don't do individual due diligence on every single individual property. That, of course, is the responsibility of the buyer, but we support you in doing that. We say, here, go pull a rent range report from here. Make sure that's the market rent. Here's some home inspectors that our clients have used, or you can just Google and hire your own. Here's the lender. If you have a lender, they're going to require you to get an appraisal. I mean, that's just given, right? So then you're going to have an appraisal. So you're going to do third-party due diligence, not because you're trusting me, not because you're trusting the seller, not because somebody else said it. You are going to independently verify. We're going to support you in doing that, but you're going to do it. And then you're going to get the results. And then if it's a good fit, then you close, and then the property cash flows and you start getting your checks the day you close.
I'm glad you brought that back up, because I don't want people thinking out there, oh, Matt's team is going to do it all. I just need to write a check. No, you still got to do, like you said, due diligence on the property, due diligence on some of the tenant, making sure everything looks good, but you've got people there ready to provide that or ready to rock and roll for you.
Yeah.
Okay, that's
it's very easy to do it out of state. I mean, it's literally the same as if it was down your block. You're going to pick up the phone, you're going to call the inspector, you're going to order an inspection report, you're going to pay for the inspection report, they're going to email you the inspection report. I mean, it's literally the same as if it was a block away from you. You're going to do the same thing. It's just out of state. The appraiser, the lender, you're going to email your, whatever. They're going to email you the report. You're going to see it. You're going to read it. It's literally the same as if it's down the block from you. You would do or should do the exact same due diligence as you would do on a property on your own block.
Mm-hmm. Are you, what market, and when we talk about how markets have changed in the last 5 years and how we expect them obviously to be different in the last 5 years, any markets that were, let's talk about a couple of markets maybe that were hot 5 years ago that have changed dramatically, really aren't as hot now. Anything?
Yeah, I mean, well, first of all, you had a number of sort of what you might call roller coaster markets that went way up, they went way down, right? Now, when they went down, it was a great time to buy there, right? So, 2010, Phoenix, Arizona was.
I was thinking Phoenix as well. 14,000 REOs in the market that were not all released. Total $300,000 houses you pick up for 30, 40 grand. It was crazy back then 10 years ago. Yeah.
It was crazy. And then what happened was, and you know this because you were in the game back then, as was I. So we lived through the same era. We watched the same thing happen, right? Everybody went into Phoenix, started buying this stuff. Now, our clients that bought then, they were locking in fantastic price to rent ratios, great cap rates, all this kind of stuff. And they did very well. They bought then. Some of them still have those properties. They got a big equity position because it's gone way up in value. And they're still collecting the rent, and it's great. Other people have sold, they've taken their profits, they bought in another market. Great. They all did really well. But what happened was that, and actually this is when the institutional investors started to get in the game, as you'll recall, right? And all of these private equity funds or hedge funds that had never bought residential stuff. Maybe they bought commercial real estate, never residential stuff. They're like, you know what? We're just going to start trying to buy thousands of single family homes. So they came into the market and it was all this stuff, so then the absorption rate just went right. And then what happened was it just drove the home prices up. And the home prices skyrocketed like 30%. But what happened when the home prices skyrocketed 30% is the rents did not increase proportionally with the home prices that were skyrocketing. Okay. So if you bought, back then, you crushed it, right? And then the home price, all of a sudden your home price is 30% higher. That's great. You're still getting the same rent. That's great. Now you got an equity position. Fantastic. But you didn't want to continue to buy another house 30% higher without getting any more rent, right? Because now what you have is a yield compression process where the cap rate is getting squeezed significantly, which means that your net operating income, your return on your investment is what's being affected, right? Your cap rate. So then we moved, you moved to other markets, right? And then we saw a similar thing in Atlanta, right? Atlanta was just an amazing place in 2011 to buy real estate. That was fantastic. And then same thing happened, right? These funds came in, absorbed the property, drove the prices up. Rents didn't go up, of course, as fast as the prices. And so you had this yield compression process again. So as long as you were ahead of the curve and buying at the right time, it was great. But when you go back to those markets, to buy later, and the rents haven't kept pace with the home prices, all that means is that you just have a lower cap rate, which doesn't mean it's horrible. I mean, you just have a lower return on your investment, but that doesn't mean it's still, home prices continue to go up after that, but it just wasn't as advantageous. And so we try to help our clients buy in the most advantageous markets at the time.
Total makes sense. And I'm having flashbacks in different markets, hot Atlanta and the price run there, Tampa, seeing Miami just skyrocket back after it was at 30 cents on the dollar for the most part, crazy. Florida, we had for every dollar spent in Florida, 30 to 40 cents of it was international money coming in.
Yeah. What's interesting too, Scott, is that a lot of people that lived in those markets, that was their only impression of what happened in the boom and the bust. It was like, oh, you lived in Vegas, you lived in Las Vegas, and it's like, oh, the market went up 50% in 1 year. Literally went up 50% in a year, right? The housing market, right? And then it just came crashing down as like a roller coaster, right? So people that live in these markets are Phoenix, like, oh, that was like the housing boom. Well, that wasn't the same thing that happened nationally. Like a market like Indianapolis, the entire market only went down like 7% total throughout the entire real estate, quote unquote, crash. it was not a massive, enormous roller coaster monstrosity in Indianapolis the way it was in these other markets, right? It was just like, oh, it's a little wave and then it goes back up. And then, so like these are much more stable types of cash flow markets where you can buy there and continue to collect your rent. And then you just, keep going through the fluctuation.
Yeah, I love Indiana. It's a great, especially Indianapolis. I mean, you being able to evict in 14 days is one of the fastest eviction areas in the country. But it's also got a great rent rate compared to values of properties on the higher side of that aspect of it all too, which makes for high cap rates and high returns too when you can leverage and tap into the 4 other buckets besides just rents out there. Where do you see yourself in 5 years? I want to know this. How many countries are you trying to get to, Matt?
What's interesting is that I'm not actually trying to rack up countries. I mean, I kind of give that 50 country number because it sounds kind of interesting and it provokes conversation. But to be very honest with you, last year, most of my countries that I went to were repeat countries. I had already been there and I went back to like a different city.
Sure.
You know what I mean? So like you and I both have a lot of love for Barcelona, for example. I mean, I've lived in Barcelona for a couple months. Love Barcelona. Last year, I went back to live in Valencia, Spain for a month.
Beautiful area. We're just there as part of an excursion, part of a cruise ship. Absolutely beautiful area, Valencia.
Yeah, but totally different from Barcelona.
Oh, yeah.
Right? So I was like, you know what? I've already lived in Barcelona for a couple months. I love it, but now I'm going to go to Valencia. So I'll just go to Valencia for a month, right? And I've already been to Spain, so it's not a new country, but it's a new city, and it's really cool, and it's really amazing. So for me right now, I mean, I am just, excited to explore the world. I do like to see new and very different cultures and places. So West Africa is very different from anything I've seen, and it's really cool and interesting to be here. But I also like, going back to places that I enjoy and seeing new cities and countries that I like. And I also go where I have friends and where I have community and where I have, I'm meeting up with a bunch of interesting people. Like, we talked about this, going to Russia for a month. I'm going to meet like 20 something people and we're taking the Trans-Siberian Railway across Russia to Mongolia with like 28 people. I mean, we're doing cool stuff with like groups of people. So it's like a bunch of friends like, hey, you want to go do, like last year, I got a couple of friends of mine. We're like, hey, let's go to the French wine country for a month. We're like, okay, cool. There's a festival in Bordeaux. We'll go down to Burgundy. We'll do this thing over, so we're like, okay, that's cool. So, you just do cool stuff because a lot of times it's the people that you want to spend time with more than the actual places even.
That's the truth. Well, definitely one of the coolest guys we've had on the podcast in our 490 plus episodes out here. How do people get a hold or reach out to you or your group if they're interested in investing or following up with you?
Sure, absolutely. So first of all, I want to invite people to take a free report that we put together, which goes over a little bit of the stuff that I talked about, but goes deeper into it. So we call it How to Avoid the 7 Biggest Real Estate Investing Mistakes that people are making in today's market. So I want to give your listeners a special direct access to that. They can just go to our website, maverickinvestorgroup.com/Carson. So your last name. So it's MAVERICKINVESTORGROUP.com/CARSON. And there you can get the mistake on how to avoid the report on how to avoid the 7 biggest mistakes real estate investors are making. So that's a lot of my experience kind of condensed into one report. And when you grab that report, you'll give us your email and we'll be in touch with you and we can connect. Now, if you want to connect with me, if you want to follow me directly, I'm on Instagram at Matt Bowles Maverick, MATTBOWLES MAVERICK. If you want to follow travel adventures and that kind of stuff, you can also reach out to me there. You can send me a direct message or something like that. Or if you want to email me directly, you can feel free. I'm just Matt at maverickinvestorgroup.com, MATT at maverickinvestorgroup.com. And that's my direct personal email, Scott, which don't give out to everybody, but your listeners, No Closer Show people, feel free to hit me up directly. It's VIP access for your people.
There you go. I appreciate it. Plus, you've got the amazing podcast as well. People got to listen to great stuff, totally binge worthy. Get on over, listen to episodes, subscribe, and leave a 5-star rating for it because Matt's is just sharing nuggets. Got some great people on there. We had a fun episode talking, but every episode Matt is a great time on there. It's obvious.
I appreciate it, man. Yeah, the show is called themaverickshow.com is the website, themaverickshow.com. It's available. The Maverick Show is available everywhere you listen to podcasts. So if you're on iTunes or Spotify or Stitcher or wherever you get your podcast, just go to the Maverick Show with Matt Bowles and you can subscribe there. But I really am, super interesting, man. Location independent entrepreneurs. Some of the stuff that we're talking about a couple episodes ago, I just interviewed a friend of mine, Tiffany Green, who's literally traveling the world on passive rental income only. She started investing in real estate at 32. By 42, 10 years later, she was making more rental income passively than she was at her salary. So she quit her job. And now she just travels around the world living off of her passive rental income without working. And we talked exactly about how she did that. So interesting real estate investors, interesting entrepreneurs, people with unbelievable travel stories. So try to keep it interesting. So themaverickshow.com is where you can check me out there. We publish once a week, every Monday, new episode.
Awesome, Matt. Well, hey, bud, thank you so much for joining us. I know you, what time is it over there anyway? How many hours difference is it between there and here?
It's about almost 11 p.m. here.
Okay. All right. So you're, it's almost 6 p.m. here. So about 5 hours or no more than that, 19 hours difference probably.
No, it's 5.
Oh, just 5. Okay.
Yeah. You're 6 p.m. I'm at 11 p.m. Yeah. 5 hours.
That's right. Okay.
Yeah.
Good stuff, brother. Well, hey man, be safe and have fun. We look forward to your future investors or future investors actually, and also future adventures as well too, bud.
Awesome, buddy. Thanks for having me on, Scott. Had a blast.
Thanks, man. Thanks. All right, guys. Hey, that's going to wrap it up. Hey, Matt dropped some great nuggets out there, not only on rentals and turnkey deal, but also if you want to do some things in your life, you want to change the location and change what you're doing, it's easier done now these days than it's done before. A lot easier to do. Sometimes the biggest hurdle is just the 4 to 5 inches between our ears. So go out, make something happen, and we'll see you all at the top, everybody.